We've taken the opportunity over the course of this week to lock in profits on gold, on silver, on platinum, and protect all of those long positions. So I'll talk you through it. At the start of the week here, we've had gold prices. They broke out to $1,945 per ounce. Over 2 trades, we banked over 500 points. Platinum, huge surge at the start of the week. This rallied over 600 points. So again, we locked in with our clients at the Gold and Silver Club over 2 trades here, over 800 points on 2 trades. On platinum, palladium prices, they surged 2% in the lead up to Wednesday's FOMC statement. Silver prices, they also had a 2% breakout. We took the opportunity to lock in just under 100 points on that position. In fact, in total, just over this week, from the pump that we had over Monday, Tuesday, and Wednesday, we banked with our clients just under 1,500 points profit across gold, silver, and platinum. However, the trap has been set. So we saw this typical pump as you go into the FOMC statement, then the rug pull essentially afterwards. The rhetoric from the Fed, this was hawkish. Even though they paused interest rates at this FOMC statement, they are suggesting going into next year, interest rates are going to maintain at the current levels for some time to come, even right the way through into the end of 2024. So this, of course, was bad news for stocks and for risk on trade. So the dollar surged by the end of the FOMC statement. Absolute classic move for the dollar index. You know, we remain long the dollar index here. One of the major points here on the dollar is that typically it does extremely well between now and the end of September. It's not rocket science. It's the end of the quarter. Traders that have done very well over this quarter, they do need to start locking in those profits for their performance between now and the end of September. Historically, the last 10 days of September, it's amongst the worst of the year for stocks. We're also seeing similar here with oil. So you would have guessed it. We are in fact just capitalizing on the pressure that we're getting at the moment. On oil, we are selling short. Now with oil at the moment, as you know from watching our reports, 91% of hedge funds and money managers that trade oil, they are long this market. The only challenge I see with that is that oil prices, they're breaking out to the highest level in 2023, but you need to start booking some profits. If you've had a phenomenal run on oil, of course, it's up 40% since the lows from June, where we were buying Brent at $73 per barrel, where you have so many hedge funds that are currently long. Once you start to see profit taking occur in this market, it can take the elevator down very quickly. This is what we're seeing at the moment. Staircase higher, and then once traders, they start to book their profits for the end of the quarter, no one wants to be the last person holding the bag here. Just ask all the crypto bros from 2022 whether they're happy about holding their altcoins from the all-time highs all the way back down for a 95% drawdown or even 99% drawdown in some cases. So again, it comes back to the point. As you see the capital flows, traders taking profit out of their portfolios, you're going to see the dollar will start to accelerate to the upside. Very common for September here. With that, you're going to see cascading sell-offs on the metals. But if you know how to play the cycle, the 3-day impulse move that we've had in the lead up to the FOMC statement, you make money both ways essentially. And now we've been gifted with an opportunity where you've got the dollar ripping out to 6-month highs here, likely going to cause max pain across the markets for long positions across multiple different assets here. As the dollar rips higher, this will cause pressure to the downside on a lot of assets. However, it's a massive opportunity here. Again, it comes back to our point. Buying on red days, not buying after the fact, after the move has already occurred. So now we've got gold making its way back towards the 1920 zone. You've got silver making its way back down towards 23. You've got platinum making its way back down towards $900 per ounce. Massive opportunities as we get towards the end of the quarter, the typical end of quarter profit taking, and then we gear up for Q4, for October, November, and December, which historically, these can also be some of the most profitable times of the year for commodity traders if you know what you're doing and you know how to capitalize on the cycle. So of course, this comes back down to utilizing a professional research-driven approach, utilizing data, statistics, market intelligence, of course, understanding the cycles. Just this week has been very clear in terms of opportunities to capitalize. Again, we've banked just under 1,500 points with our clients at the Gold and Silver Club, just this week alone, on 2 positions on platinum, 2 on gold, and 1 on silver. You know the calculation, but just in case you don't, the monetary value of that, for every 1 lot you'd be trading, that's $15,000 of profit. For every 10 lot contract you'll be trading, that's $150,000 of profit just over Monday, Tuesday, and Wednesday this week. Locking that in on the pre-FOMC pump, and then we've seen the rug pull afterwards, rinse and repeat, buy low, sell high, bank your profits, reload again on the sell-offs, which is where we are right now. We're in the reload phase now where we're looking for the markets to start correcting back down towards the swing lows, presenting lots of opportunities now between now and the end of September to build out those positions as we go into the final quarter of the year. Then further compound this with the intermarket correlations, the ratios, so you understand the capital flows and how to play that, of course, over each week, over each month, over each quarter. But then, of course, further align this with the narrative the macroeconomics, the geopolitics, of course, what the central banks around the world are doing. We've seen that, of course, the playbook here from the FOMC statement has played out perfectly as well. And then finally compound that with how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.